What does the housing market have in store for 2022? Are we finally going to see this massive housing crash that's going to drive down housing prices? Are we finally going to see the foreclosure wave that everyone was talking about in 2020 and partly through 2021? Well, in today's video, we're going to talk about expectations for the 2022 housing market. We're going to talk about what the first quarter is to bring. Also, we're going to talk about the spring market, as we move into summer. And then we're going to talk about the second half of the year. We are going to see a change in the housing market. And in today's video, we're going to discuss that in more detail. We're going to talk about what to expect if you're a buyer out there, if you're a seller that's planning on selling your home, how to take advantage of the market, because we are going to see a shift. Now, if you're watching this video because you expect me to talk about a massive housing crash coming, you've come to the wrong place. But what I would encourage you to do is if you are, a housing crash enthusiast, if you will, if you're someone that really wants the housing crash to happen, I would ask you to watch this video in its entirety, because I'm going to talk about why that housing crash isn't realistic. Anyone out there touting housing crash at the moment doesn't truly understand supply and demand, because the only time a housing crash could actually happen is if we had way more supply than we did buyers willing to buy those homes. And over the last couple of years, what we've seen is way less inventory on a national scale than we do buyer demand. Now, buyer demand, although it's being driven by low interest rates, which are going to change over the next year, and we're going to talk about that in more detail, you still need an increase in supply. You need way more supply than you have buyer demand to change the fundamentals of the housing market. And for a crash to happen, you have to have a lot more supply. Housing crashes don't happen overnight. They take weeks, months, years to build in order to create that. And we're a long ways from a crash, but we are on the brink of a change that will affect housing prices. And that's what we're going to talk about in today's video. As of today, we're about halfway through the month of December, and we're actually going to close this year out, 2022, at around 6 million total units sold in the United States, which is the highest number we've seen in quite some time. And that's mostly due to the strong spring and strong fall winter markets that we saw this past year. In fact, this winter market is going to be probably the strongest close of a year that we've ever seen in real estate, right? Typically, this is the time of year when things slow down, when buyers put things on hold. But this year is a little bit different. There's a lot of people out there thinking interest rates are going to rise. And because of that, they're looking to take advantage of the market, and therefore they're purchasing property, which is helping make the fall winter market one of the strongest we've seen on record. But as we move into 2022, things are going to change a little bit. We're going to end the year at probably the lowest levels of inventory that we've seen all year. And that's pretty normal because, typically this isn't the time of year when people are putting their homes on the market. And as of January 1st, you're not going to see an immediate shift in the housing market as you come out of, the holiday season. It takes a couple of weeks for people to get over the holidays, to get back in the swing of things, and really start to consider putting their homes on the market. Now, some people already have this planned, right? They have the date in which they're going to put their home on the market, but many out there are starting to contemplate now their plans for 2022. They're writing down their goals, they're writing down their thoughts, and they're, considering what they're going to do. And it's going to take a couple of weeks after getting into the new year for those homes to come to the market. Typically, we start to see that around February. Now, February is going to be the start of our spring selling season, right? This is typically the time of the year when things really heat up. That's when we see the most sales for the entire year. People list their homes in February and March. They start to go into escrow sometime between March, April, May. And that is our spring selling season. That is the time of year when people typically get the most amount of money for their homes. And this year is going to be very similar to 2021. We're not going to see the appreciation numbers, in my opinion, that we saw last year, but we are going to see a very strong market. Why? It's because interest rates are still going to remain low. Now let's talk about what the Fed's currently doing and why that's likely going to change, which may change the housing market as we move into the end of the year. So currently the Fed just came out, said they're going to start tapering bond purchases. And once they're done tapering bond purchases, which is likely going to be towards the end of next year. They're going to start to raise short-term interest rates. They're going to raise the Fed funds rate, which typically is going to affect interest rates, and interest rates are going to rise. Now, a lot of the major organizations out there have been, trying to predict where interest rates are going. A lot of people expected rates to be near 4% this year as we end the year, and they're actually going to end the year somewhere around 3.25%, which is considerably lower than where most people thought they would be. But as the Fed stops to taper those bond purchases and start to raise short-term rates, chances are interest rates are going to rise. And as they rise, that's likely to affect buyer demand. But that's not going to happen in the first quarter or likely the second quarter of 2022. So interest rates are going to remain low, which is going to give buyers, the same amount of purchasing power that they've had over the last couple of months, which means any buyer sitting on the sidelines looking for the right home who's been putting in offers is going to get another shot as more inventory starts to come to the market in the spring. We're going to see a pickup in inventory. It's just natural for that time of year. And so as inventory picks up, those buyers that have been sitting on the sidelines are going to get back in the game. Those buyers that have been continuing to look are going to be there. You're going to have new buyers coming into the market. So you're going to have a strong spring market. Now, as we move through summer, and the bond purchases really start to taper and they start to raise the short-term rates, assuming that they do, when they start to raise those short-term rates, interest rates are going to go up, which, as I mentioned a moment ago, is going to affect home buyers' affordability. And it's really going to affect home buyers on the lower price points, the first-time home buyers in many cases. Because if you're a move-up buyer, if you're a luxury buyer, chances are you've either got money coming from the sale of a property to put into a new property, so you're not really stretched on your ratios in many ways. If you're an investor, a lot of those are cash buyers. They're not really affected by interest rate changes. And then you've got luxury buyers. A lot of the luxury buyers out there are putting big amounts of money down. They're pulling money from equities, to put it into fixed assets like real estate. And a lot of times they're not affected, so much by the affordability side of things. But who is going to be affected is those first-time home buyers, because as prices continue to go up in spring, as demand exceeds supply, which is going to happen in the spring, you're going to see continued appreciation, not like we saw in 2021, but you're going to see home prices continuing to rise in most major markets across the United States. Now, something I want to throw out there, as I do in most of my videos, all real estate is local. I'm talking about Southern California primarily. If you're in an area where you're already seeing home prices decline, you're seeing huge increases in supply, things are changing, then your market may be a little bit different. But in me networking with top real estate agents all across the country, agents in Austin, Texas, agents in Raleigh, North Carolina, agents in New York and New Jersey, Seattle, Boise, parts of Montana, California as a whole, Arizona, these markets are still in short supply of homes and still have a lot of demand out there. So these markets are likely to continue appreciating. And as they continue to appreciate and interest rates go up, those first-time home buyers are going to be stretched thin. Many buyers go into the process with a budget, lower than what they are maxed out at. But as they start to look at the market, realize they can't find anything in the price point they're looking, they start to, extend their budget. And in many cases, they get near the top end of their budget where their ratios are pretty much extended. And if they're searching in that price point and rates go up, that means they can no longer afford those homes. So those buyers are now sitting on the sidelines, which means inventory in the lower price points might continue to build over the second half of next year once the Fed starts to raise rates. Now, if you're in areas like Southern California, it's probably going to continue moving along, right, sideways. But if you're in a market that's already seeing some slowing, as interest rates go up, you're likely to see more slowing, which means a drop in buyer demand and an increase in inventory. And I don't think this means a housing crash is coming by any means, but it does mean a market slowdown in the second half of next year. Now, what I mean by slowdown, remember, it's all relative. When I talk slowdown, I'm talking about a slowdown as to what we're seeing right now. What we're seeing right now is multiple offers across the board in many cases. We're seeing contingencies waived across the board in many cases. We have people going way above the asking price in many cases. A slowdown just means Instead of maybe 10 offers on a home, you get 2 or 3. Instead of waiving all the contingencies on a property, maybe they're just waiving the appraisal, or they're shortening their contingencies to try to be competitive. That means instead of going way above the asking price, they just have to offer the asking price, or maybe just a little bit above it in order to be competitive. That's what I mean by a slowdown. I'm not saying you're going to see a huge decline in prices. I do think prices next year this time are likely going to be higher than where they are now. But I do think in the second half of next year, it's going to be easier to be a buyer across the board than it is at the moment. Now, keep in mind, I do think home prices at that point are going to be higher, and interest rates are likely going to be higher. So if you were considering purchasing now versus waiting, I think you're going to pay more money for that same house in the third and fourth quarter of next year, but it might be a little bit easier to purchase it. So if you're someone been sitting on the sidelines thinking, hey, I'm just going to wait until things completely change, that's okay as long as you understand what that means, right? You don't need to go out and buy a house today just to buy a house. You need to make sure, you have your finances in order. You need to make sure it's the right house. You're not settling. But at the same time, you also need to understand that by waiting, chances are that house is going to cost you more money. Now, a lot of people out there are going to say, well, Jeb, you're a real estate agent. You're just selling your services. You're just selling yourself. You're trying to get business. I'm talking to a nationwide audience right here, right? There's no benefit for me to tell somebody in Oklahoma that home prices are likely to be higher next year than they are right now, other than just making people informed, helping you understand supply and demand, right? There's a lot of fear out there at the moment. People pushing fear across multiple mediums, whether it's YouTube or the news or whatever, just putting headlines out there. And you need to understand what they mean. A housing crash isn't going to happen until you have this huge increase in supply. And at the moment, nationwide, we're millions of homes short of where we need to be. So until you see builders building a surplus of homes where no one's buying them, and that's not happening here in Southern California, and you see a drop in buyer demand, which you're not seeing at the moment, you're not going to see a change in the housing market. In fact, if you saw increased supply at the moment and you saw buyer demand drop off, it would take months before you really saw a change on the housing front nationwide. And so keep that in mind. If you're a buyer out there, these are things you need to consider. Now, if you're watching this wondering what you need to do in order to set yourself up, you need to be fully pre-approved. You need to go through that process. You need to make sure you've dotted the I's, crossed the T's, put yourself in a position to make an offer when the home presents itself, because the spring is going to be a competitive market for most areas out there. So you need to be in a position to make those offers. Now, if you're wondering how you get pre-approved, going through the process, do me a favor. I'll put a link in the description below. Happy to refer you to somebody that does business the same way I do. You can also get a link for a real estate agent in there as well if you need to get connected with somebody. But I encourage you to make sure you understand where you are financially. You need to have a longer term time horizon. That way, if the market does change, you're not in a position where you're pressed to have to sell a property or have to do something irrational in order to get out of it, right? So time is always important when buying and selling real estate, so just keep that in mind. Now, if you've made it this far in the video, I would like to ask a favor. If you found any value in this content at all, hit that thumbs up. Subscribe if you want more honest information out there about the real estate market, somebody to guide you through the process, someone here not to spread fear, but really provide you information so you can make sensible decisions, again, by hitting that subscribe button. And if you want to see how interest rates actually affect housing prices, I go through it in a video where I break down rising home prices over the next year, along with rising rates, so you can see exactly how it's affected. So check out this video here where I go to it in more detail. But for now, I appreciate you taking the time to watch. I appreciate all the support. Hope to see you again soon. Have a great day. Bye-bye.